So today what we're going to be doing is going over a weekly recap of last week and how I ended up doing compared to the market. And at the end of the video, I'm also going to be getting into some trades and explaining those trades. So if you're interested in how I did this week and what trades I'm going to be trading this week, make sure you stick around until the end of the video. Welcome back, everyone. Hope everyone had a good trading week. Last week, I unfortunately ended in the red, but not by a lot. I'll go ahead and explain that in a little bit. It's currently 7:53 Central Time, so market opens up in around 30 minutes. So towards the end of the video, I'm going to cut to when market opens, and I'm going to show you guys the trades that I end up taking. But for the first part of the video, we're going to be explaining how I ended up losing around $50 and what trades I took last week. So if we go ahead and look at the weekly chart, it says we're down $10, but in fact we're down around $60 because this after hours is the amount that has moved this morning. So today, Monday morning, that didn't take into account last week when Friday at the end of the market. So in fact, we're down around 1%, which is still pretty good compared to the overall SPY. We can see how the SPY did. SPY was down around a little bit over 2% because it was closer to 300. Right now it's market open, and that's why it's been moving up, but it was closer to 300, so it was down around 2.5%. So we did significantly better than the market, which is always nice. However, we did end in the red, but that necessarily isn't a bad thing because, like I said, we've been trading selling option premium. So even when we do end in the red, and that's in quotations, we still have that collateral which we received these stocks. So in this case, the first thing that we're going to go over is the Bank of America position. So if you guys remember, we ended up selling the $24 strike put on June 22nd, and we received a total premium of $36. We got assigned at the $24 strike, and we are currently down. It says we're down $65, but we're actually down a lot less because our price should be close to $23.65, I believe, because that's taken into account the premium that we received. So we're actually down close to about $30. But today we're going to be selling some covered calls on this and hopefully try to lower down our cost basis even more. So the next position that I got assigned is on American Airlines, and American Airlines we got assigned at a $14 strike, but for this one we received a premium of close to $50, I believe. We go down here and check $45 for this one, and that means that our average cost, instead of saying 14, it's actually $13.55. So on this one we're down around $100, but the premiums on this one are pretty high, so I should be able to lower down my cost basis fairly quick. They also put out some news that they said that starting July 1st they would be flying at full capacity, so that's coming up in a couple of days, and so that should help the stock start rising even more. I did end up taking another trade on American Airlines, and this was kind of just to hedge my position because the airlines and the whole stock market was really downtrending towards the end of the week last week. And what we ended up doing was buying 10 12.5 puts at a price of $40. So my total position was around $400, and we ended up selling right away within 5 minutes at $54, and we ended up profiting a quick $150 in the matter of minutes. And so that allowed me to hedge my position and basically cut losses on the option selling part of American Airlines, because it essentially allowed me to lower down my cost basis tremendously. So if we take that into consideration, my actual cost basis is close to $12.50, something like that. I would have to go back and do the math, but essentially we'd able to basically cover most of the losses, because if we use those $150 and add it into the total premium, we should be right around break even right now. So that's always nice. So the last position, which I kind of explained in my last video on what I wanted to do, was Ford, and this is the one where I'm currently struggling to trying to get rid of it and cut minimal losses, so basically end up with a very small loss. and we're currently down around, let's see, my average should be around $6.72, so we're down close to $80 on this one. We're gonna sell the 6.5 covered call on this one to try to lower down my cost basis, but essentially what I'm trying to do is trying to get rid of it right around the 650 area, because I don't want to sell the $6 strike, because then that would create an even bigger loss. It's not a terrible position, but as I mentioned in the last video, the implied volatility has been dropping significantly, and so taking that into account and the current strategy that I'm using, which is option selling, it's not really a good stock to do this anymore, because the implied volatility has dropped significantly, and so that means that the option premiums are not going to be that good. But we're going to see what we can do with this one. Hopefully try to, like I said, cut losses at around $6.50, so that should leave me with a loss of around $15 to $20, but we're just gonna have to wait and see if it wants to get back up there. Right now, if we go ahead and check the covered call of 6.5 for this week, it's currently trading right around $6, so hopefully if we can sell it right around $8 to $10, that'd be great. But we're just gonna have to wait and see where it opens up in around 30 minutes. So that's pretty much it for this part of the video. I will come back to you when the market opens back in 30 minutes and show you guys the positions that I take for this week. So I ended up not making a video about the positions I ended up taking because I just didn't have enough time to make it. So we're just gonna make another recap video. So this video might be a little bit longer, but I'm gonna try to hurry up so it's not too long. So once again, we still have the three positions. That we've been selling covered calls on. We sold another $24 call on Bank of America for a total price of $40 this week, so we got a little bit more, and it expired worthless, so we got to keep the $40 and the 100 shares of Bank of America. So we're going to continue selling covered calls on this one. For the next one, we sold a 13.50 covered call on American Airlines, and we got a total premium of $30 for this one. This one was a little bit riskier considering the fact that my average cost basis on American Airlines was $13.55. So if this one were to have gotten assigned, then we would have had a really small profit of around $20. But unfortunately, it didn't get assigned, so now we lowered our cost basis considerably, and we can continue to sell covered calls on this one and increase our profits. We still have the forward position, and I'm still working on this one to try to lower down the cost basis and get out with a small loss. We ended up selling the 6.5 call, but we sold it for this week, not for the previous week, and the reason why is because the premiums for this week, because it had more time till expiration, were a lot higher, so we were able to get in for an average credit of $8. And so if this does end up expiring worthless, it's going to bring down my cost basis from 6.72 down to 6.64, I believe, right? That's 6.64, and so this is going to bring me considerably closer to 6.50. and so if it does get assigned, we're just lowering down that potential loss down from like $15 up to like $12, which is going to be a lot better than losing a considerable amount if we try to sell the $6 strike put. So the next positions that I ended up taking were a little bit bigger and riskier positions, but we're going to go ahead and dive right into them. So the first one was on Facebook, and this one I did a really good job at cutting losses because the trade ended up going against us. So what I ended up doing was on June 29th, which I believe was this past Tuesday, if I'm not mistaken, we tried buying a couple 207.5 puts, and the reason why is because Facebook had dropped tremendously because there was a little bit of controversy going regarding their censorship in some of the posts that were going on. So that caused a lot of big name advertisers like Coca-Cola, Twitter, and all other big name companies to start pulling ads from Facebook. And if I'm not mistaken, I think I read that they were going to pull ads for about a month. So that caused the price of Facebook, which was trading right around the 250 area, 242 area, all the way down to 207 area. And so I think it was Monday or either Tuesday morning, it started to gap up from around 206 up to 212 really quickly. And I saw that as an opportunity to potentially short Facebook, because and there was no news source or response from Facebook that they were going to change anything. So I thought that it could potentially drop below $200. So that's what my initial plan was on Facebook. As you guys can see, it did not end up working out. Facebook continued to soar from the low of 206 all the way up to 233, but we got stopped out at 215 and we cut losses for about $132. So decent sized loss, but we were able to mitigate that by cutting losses fairly quickly. The next one that we ended up taking was a covered call on SPY, and this one also did not end up going too well. We entered the spread for a total premium of $15, but we ended up losing around 40, like $48, $45, something like that. I was trying to make a quick buck on this one, but unfortunately, I should have just stayed on the sidelines and, not try to risk this one, because we, SPY, with all the coronavirus cases rising, was going to sell off, but we can see that it did the complete opposite. It continued to uptrend higher, ending the week at 312, up 3.75%, and so we had to cut losses on this one. So we took around, like I said, around the $45 loss, not that big. But the next one we ended up trading was on Snapchat, and this one was a win. So Snapchat has been uptrending tremendously for the past month. It's up nearly 20%. And so what I ended up doing on this one was buying a couple of $24 strike puts for next week, which is July expiration July 10th, and we bought them at an average price of $77. And so on Thursday, was it Thursday, right? No, Tuesday or Wednesday morning, Snapchat started to downtrend. It hit a high. It actually opened up higher. It went from 23.95 close from the previous day all the way up to 24.14. But after that, it continued to downtrend and sell off into the close, hitting a low of around $23.27, I believe. Let's look at this and see if we can see a better shot. $23.32, a low, which was July 2nd. And so you can see that this one did end up dropping tremendously. So we were able to profit a considerable amount, around $90. Yeah. And so that offset the losses from the other two trades that we took. But overall, we ended the week up green. It only says $11 right now because I'm making this video on Sunday, so it's taking the face value of the account from last Sunday. But in reality, if you guys remember from earlier on in the video, we started off last week at around $4,733, and so we're ending off this week at $4,807. So overall, it was around a $73 win, I believe. 73 or 77. I'd have to go back and do the math, but that's about 1%. So we're continuing the goal of a weekly 1% gain. So now going into this week, we have a buying power around $600. We also have most of the, all of these shares to sell covered calls on. And I also have some very important news that's going to be coming out. So I really think you guys are going to be interested about the new project that I'm going to be starting. So if you guys want to learn more about that and more about my trading in general, make sure you stick around for other videos. That's pretty much it for this video, and I will see you guys in the next one.